Alright, dear friends, in this video we want to get acquainted with another advanced technical analysis tool, namely Bill Williams' tools, and see how we can use this tool to determine the trending state of a stock's price chart. Mr. Bill Williams was born in 1932 and was an American trader, actually working as an American trader, and he wrote various books on the subject of technical analysis in the stock market and trading. His research, Mokam, was actually about the stock market indicators and new indices for analyzing the behavior of financial markets worldwide. However, he analyzed and invented three important tools. These are known as the Bill Williams Fractal Indicator, the Bill Williams AO Indicator, and also referred to as the Awesome Oscillator, and the Bill Williams Alligator Indicator, which is known as the Alligator Indicator in technical analysis software. The Alligator is actually an indicator that shows the position of a stock in terms of technical analysis trends and indicates at what point it should be traded. The Alligator Indicator consists of three specific moving averages, meaning it actually includes three specific moving averages that are used. It has a blue line, a red line, and a green line, where the blue line is referred to as the jaw period, or the alligator's jaw, which usually includes a 13-day period. And the red line is the teeth period, or actually the alligator's teeth, which includes an 8-day period, and the lips period. There is a green line that you can see here, which shows a 5-day period, known as the alligator's lips. But in technical analysis, when the alligator lines get very close to each other, for example here, you see the lines have gotten very close to each other, or in this area. These lines have gotten very close to each other. These areas are where the chart is in a neutral state, and calm, and the market does not have enough strength for a trend. And we refer to it as the market being in a range-bound state. But when those lines start to distance themselves and move apart, the market begins to trend. Now, whether it's a positive trend or a negative trend, in technical analysis, whenever the three lines align in one direction, the market moves in that direction. For example, see here, the three lines are very close together. We have a range-bound state. We have neither a trend nor anything else. But from that point onward, the market starts to trend and becomes directional. And since the three lines are pointing upwards, our trend is also an upward trend. As I mentioned to you before, the Alligator tool is one of those tools that generally indicates whether a chart is trending or not, and it doesn't give you precise signals. You need to observe the trending state of the chart on it. After the trend begins, the stock price moves with greater intensity, and Bill Williams' technical analysis metaphorically states that the alligator, which was actually asleep, is very hungry after waking up and wants to create a large appetite for the market. Here, you certainly observe that after the market actually enters a downward but short-term trend, these three different lines of Bill Williams take on a state of confusion. This means that the three lines have not yet aligned, so they cannot assert that we have a strong downward trend, and immediately they align again and confirm the upward trend. So the alignment of the lines with each other can indicate a strong downward trend or a strong upward trend. Be sure to use this tool to find trends, and you can use it as a powerful tool to identify the current trend of the stock's price chart.